Ladies and gentlemen, Matthews here from MNF FOREX Traders. I'm here with a trade forecast on Gbp JPY right here, about 1 to 18 risk to reward ratio. So for that and more, watch the rest of the video. All right, so what you're able to see right here is a very nice setup on GBP JPY right here. A rally based drop supply zone with liquidity being created right here. We can see the market actually compressing as it's going into this direction right here. And right here, you can see that the Asian session is still open right here, and we always wait for the high of the Asian session to be taken out before the market can actually drop, right? So in this case, we're waiting for the market to push back into this area right here so that we can actually sell. However, what's happening right here? So if you drop to the, I'm on a 5 minute time frame right now. However, if you drop to the 3 minutes and all the way to the 1 minute time frame, you're going to realize that we had a very nice order block right there, and that's the reason why we actually chose this level for actually our order block right there. You can see that that's the last candle right there that we chose as an order block, and we're waiting for the market to push back into that area so that we can actually get involved, right? And yeah, so this blue thing that you're looking at right now is actually an indicator that actually shows the Asian session, right? So always wait for the high or the low of the Asian session to be taken out before we can actually get involved. But however, how did we come all the way to this decision right here? So let's go back to the 4 hour time frame. Okay, so on the 4 hour time frame, you're going to realize that actually, let's go to the daily time frame. Okay, so on the daily time frame right here, you're going to realize that we have a rally base drop supply zone, right? Then we saw the market actually breaking the low right here, creating a new lower low, and then the market pushed back to this high right here, created a ton of liquidity. So we see the market creating liquidity right here, and then you see that this big move to the upside took out this liquidity right here. And guess where the market is headed? It's headed towards this level right here. And however, there's something happening on top here, so we go ahead and see what is happening there, right? And let's drop to the 2 hour time frame, and we see where we can actually find our order block right there. So we drop again further to the lower time frame, and let's see. So the beauty about multiple time frame analysis is that you're able to reduce your stop loss to as small as possible, because if you take this trade for example on the daily time frame or the 4 hour time frame, the stop loss is going to be like 70 pips, right? About 70 pips. So that is okay. Where we are right now on the 30 minutes time frame, it's okay. Yeah, so what we do here is now we extend this to the right side, and you're going to realize that this is where price is currently at. This is where price is currently at. It's actually within this zone right here. However, this is too big of a stop loss. So for example, if you had to do this, this is going to give you like what, 60 pips stop loss, and we don't trade like that here. We don't trade like that here. So usually what most people would do is that they'll get this zone here. Okay, they'll get, this is the rally based drop supply zone, which is okay, just like that. But we don't trade like that because that's too much of a stop loss, and it's going to take time for it to actually hit profit, take profit. That's if price is going to go all the way to take profit, right? So normally you do this, you meaning your stop loss is going to be up above there, and then my target is probably going to be this one is going to be a swing trade if you're going to trade it like this. So potentially they wait for price to react from there. Then stop loss was going to be something like 50 pips right there, which is okay for if you're a swing trader. This is a very solid setup right here. It's a very solid setup right here, and yeah, you target potentially you're going to target these lows right there. So for a swing trade against 50 pips is okay, and this looks very solid. And you can see that the market is within that particular zone right there, and we might see the market actually continue to drop right here. However, what I had to do was I had to go to the lower time frame and see what is happening right there. What is happening on the lower time frame? Okay, what is really happening on the lower time frame? And then that's how we actually came across this zone right here. So we saw the market still in the zone, and we saw the market reacting. So we had a rally based drop. We went to the lower time, we find our order block right there. Then we saw this consolidation right here, and guess what? Now we're waiting for the market to do what? To break this high, and it comes to this level right here. We can get involved. And if the market takes out this high, guess what? We have another high just above here. So if the market takes out the first high, and we will go and wait for the market to actually come to this area. So let's even predefine our order block right there. So if you're watching this video right now, this is a really potentially good signal, and you'll be happy that you actually did. So this is also 5 pips right there. So if this doesn't hold, if the first zone doesn't hold, guess what? We still have another zone up above just here. And I've seen this happening most of the times. If the first zone fails to work out, then most of the time the market will come to the second zone, which is just above here. So you have to be aware. And when they're taken out, and guess what? If you have your confirmation entry, if you have the market giving you confirmation to enter on the first trade, guess what? You are supposed to enter. And if it takes you out, it takes you out, and then you wait for the market to come to the other zone right there. And guess what? As long as you have the confirmation, you execute while respecting your risk management, knowing all in advance that the overall trend of this particular trade is to the downside. Therefore, you are free to take either the first trade if the market comes to this level and gives you your entry signal, or to wait for the market to come to that zone right there, because this zone also is a valid area to actually enter from. So did you see how we came from? We went from the higher time frame to the down to the 5 minutes time frame right here, and all the time frames are actually agreeing with each other. That's multiple time frame analysis, also called top-down analysis, and we teach all this in our M&F mastery course. Links are down in the description if you'd like to actually be able to analyze and trade exactly like I've shown you. Get lifetime mentorship, lifetime signals, plus a lot more for a once-off payment of $250, and the links are down in the description. I hope you found value in this video. If you have, make sure to subscribe, like the video, comment in the comment section. Until next time, goodbye.